Jonathan, for the last year or so, it's been pretty easy to follow luxury stocks. There's been a simple equation between China and luxury. As the Chinese consumer goes, so goes the luxury goods companies. Does this simple equation still hold true?
Well, some people are starting to think maybe it's not quite that simple. Today we had first half results from Prada, the Italian luxury goods maker, whose shares trade in Hong Kong. And we had a trading update from Richemont, which is a Swiss watch and jewellery maker predominantly. And these guys did a lot better than analysts expected, and their shares went up. However, when you look at the detail of the results, there is more to them than meets the eye. So things aren't going well in China, and especially they are not going well in Hong Kong and Macau, which is where a lot of Chinese do their luxury goods shopping. And they got a big tailwind from currencies. Both these companies report in euros, so they got a big boost.
And they're not going to get another boost, right? Because
that's right. So if you look,
since these reports came in, we've been watching the Chinese currency weaken or get weakened, as the
that's right. So in the first half, Prada's sales in China, in reported terms, were down 1%.
Not
in
bad.
Constant currency terms, i.e. if the exchange rate had been the same as it was this time last year, they would have been down nearly 20%. That is a big difference.
That's a disaster.
Sure.
Minus 20% from the region that was giving you the lion's share of the incremental growth in luxury spending is a disaster. Is it not?
Well, on the face of it, no, because both Prada and Richemont reported very strong increases in sales in both Europe and Japan. But there's more to that than meets the eye as well, because a good portion of those sales, and we know not exactly how much, but it's certain that a decent portion of those sales are generated by people from China going to Japan and going to Europe on holiday. And the reason they're doing that is, of course, because of the exchange rate. It is cheaper. Japan has devalued its currency by a lot. But the thing is, the trading update ran to the end of August, and Prada's results ran till the end of July. Since then, of course, China has devalued its own currency effectively, and in fact the yuan has fallen by more against the euro and against the yen than it has against the dollar. So it remains to be seen whether that effect will continue to play out throughout the rest of the year.
So to sum up, we might say that we have not disproven the equation between China and the luxury goods makers, because we have not seen the China devaluation story play out yet.
I think that would be a good summary.
Thanks very much, Jonathan.